Alright, guys, welcome back. So, in this lecture, we're going to talk about price action basics. This is really the foundation of everything we do. Okay, so let's move on. So, what is price action? Now, you might have heard this term price action thrown around a lot. People make it sound complicated, but I'm going to make it simple for you. Okay, price action is just reading what the market is telling you. All right, I'm going to repeat it again. Price action is just reading what the market is telling you through the price movement itself. Okay. No fancy indicators needed, just the raw price. Okay. And here's something David Weiss says that I love. The charts speak to you. Once you learn to read them, they tell you a story. Every bar, every candle, it's living tracks. Our job is to learn how to read those tracks. Okay. So support. What is support? Okay. So let's start with the most fundamental concept, support and resistance. Support is a price level where buyers come in. It's like floor. Okay. When price drops to this level, there's demand there. Buyers say, okay, this is a good price, I'm buying. And that buying pressure stops the price from falling further. Okay. So price touches, bounces again. The more times price respects a level, the more significant it becomes. Okay. So let me show you this example here and on the structure. Let's go ahead and see. Here we're talking about support, right? So see here, and as I told you, we're gonna be talking about forward testing. So let's do that. So see, you know, here quarterly started, and then as it moved on, made higher high, it's coming to the midpoint, right? So now becomes our support, this 50% level. And when the market comes back again to that level, you see the reaction happens, right? And we see the market went up. Okay, so this is support. Okay, there's another concept we call resistance, the ceiling, which is where prices rises to this level. When prices rises to this level, sellers come in and they say, okay, this is a good price to sell. I'm taking profits, and that selling pressure stops the price from going any further. All right. So this level here, price went up, hit it, got rejected, went up again, got rejected, and that's resistance. All right. Now the fishing analogy. So like now here's a key insight from Wyckoff, and this is very important. David Weiss describes finding trades as being like fishing, It's like a trade at the edges. When you go to fishing in a lake, you just don't row out to the middle and throw your line in the water. You go where the fish live, around the edges, near the sunken trees. Same thing with trading. The best trades happen at the edges of ranges, at support and resistance levels. That's where bulls or bears are exhausted. A small amount of pressure can reverse the trend right there. So when you're looking for trades, ask yourself, am I at an edge or or in the middle of nowhere? If you're in the middle, wait, be patient, let price come to the edges. Okay. So now, as we talk about support and resistance, let's talk about trend. Okay. So in market we have uptrend. You know, the analogy is like a stair goes up. Imagine like when you go up the stairs, you go take the step by step, and then you take detour, and then you take the next stair upgrade, right? So that's what we're going to be doing about here, right? So when market makes higher high, higher lows, you know, so all right. So see, when the market makes higher high, higher lows, That's our uptrend. Okay. Um, so basically, the concept is understanding whether the market is trending or ranging. So this is crucial because how you trade depends on which environment you're in. An uptrend is simple to identify. Okay, you're looking for higher highs and higher lows. See this. Here I'll show you example. If you see here, market is making higher highs and higher lows, right? These lows are higher than this. It's just going up. If I press here, we see the same pattern happening. Okay, you see, and if you see it as like a staircase, you see when it comes back, takes a detour, and then it goes up again. So that's where our market structure comes in. Okay, I can actually show it to you like this. So imagine like this. Okay, market is taking this stair. Okay, and each step is higher than the previous. Okay, if someone is climbing stairs, you don't bet they're gonna suddenly jump down, right? You go with the direction of the stairs. Okay, so you know, so this is what it looks like: higher highs and higher lows. Okay, now let's talk about downtrend. So a downtrend is simply the opposite: lower highs and lower lows. Each swing, each swing is lower than the previous one. Okay, and each swing is lower than the previous one, shares goes down. Okay, in a downtrend, you're looking for shorts, not longs. Don't fight the structure. If the market is going down, don't keep trying to catch the bottom. Go with the flow. All right. Now the ranging markets. This is where the price is bouncing between two levels without making new highs or new lows. It's like the market is resting, catching its breath, deciding what to do next. Okay, in Wyckoff terms, this is either accumulation or distribution. The big players are either buying up shares, tightly accumulation, or selling their positions, which is distribution. Either way, it precedes a big move. Okay. Now, when you see a range, you just want to see, you just want to watch the edges. What happens when price hits support? Does it bounce strong or does it break through? Same with resistance. Okay. So if I go here and enable the Wyckoff, you know, you see this here. This was in range, right? And this is coming from here. You see this distribution structure, buying climax, automatic rally. Here it bounced off and then it break below the support, right? Then it came down, right? And then when it came back here, it was going sideways. And then this big move preceded this one, right? So that's what we are talking about um, there, right? Now, let's move on, and we're gonna be talking about something that changed my trading completely, understanding how higher time frames influence lower time frames. Okay, so let me show you what I mean. Um, this is a daily chart, and you can see the important levels here. Okay, so let me just enable this. You can see the important levels here. Okay, midpoint, highest high, lowest point. Okay, so these are the significant levels, like when I go here, you can see this level after 110 days, this level acted really good. Again there. So it was holding above that. Okay. Now if I switch to 15 minutes time frame and I'll keep that there because I want to show you and see in this one, I'm going to change it to 15 minutes time frame. And what I'll be doing is like, I'll just put it here so that both are aligned there. And we see So let's see. I'm just gonna run it and we see this. Okay. So this is daily time frame and this is 15 minutes. It's moving much faster, right? And you see this is around here. So we'll see what happens when the market comes around here. Okay. So when it reaches, see when it reaching here, you see this big move that's happening, right? See this was support there and market jumped up. Okay. So that's the significance of higher time frame. All right. Um, and why? Because the big players on the daily time frame are watching that level. Okay, here's the analogy I use. Think of the daily chart as the GPS showing you the big roads, the highways. The 15-minute chart is just your local streets. Okay, you need to know where the highways are before you navigate the local streets, right? So if you only look at the 15 minutes chart, you might think, oh, this is support week. But when you zoom out to the daily, you see it's a major level. That context changes everything. So here's the rule. Always identify your higher time frame levels first, then zoom into your trading time frame to find entries. The higher time frame gives you bias, the lower time frame gives you precision. Okay, so this is what we talked about. All right, and the confluence is that's where like magic happens. It's like this is one of my favorite concepts. Like this is where multiple factors line up at the same price level. So this area here, we've got like daily support level. Okay, so check this out. Daily support level coming from here. Okay, I actually draw it as red. It's the lowest. Okay, so if it's not holding that low, meaning it's not making lower low and closing below that low, then it's basically a good support level. Okay, so daily support level was around and round number. So it's around like psychological level of 76,000. Okay. So there's three reasons to expect buyers at this level. There's confluence, and confluence means higher probability. When you get confluence, you're not just hoping the level holds. You've got multiple reasons why it should hold. Big difference, right? Always look for confluence. Support alone is good. Support plus the trend line is a better. Support plus trend line plus volume climax, now you're cooking, right? So yeah, and we're gonna talk in much more in depth later on. So don't worry, like I'm gonna explain you everything. Okay. So this is what we talked, right? So three questions framework. And let me give you something practical to take away from this lecture. Before you ever look for trade, okay, first, what is the trend? Higher highs and higher lows means uptrend. Lower highs and lower lows means downtrend, and neither means ranging. Second, where are the key support and resistance levels? Mark them on your chart. These are your fishing spots. Okay. The third is what does the higher time frame say? Is your support level on the 15 minutes also significant on the daily? If yes, it's much more likely to hold. Okay. If you can answer these three questions, you're ahead of 90% of the traders who are just guessing. Okay. So here's what I want you to do. Open your trading view, pick any chart, Bitcoin, Euro, USD, Apple, stock, doesn't matter, and manually identify the current trend. Is it up, down, or ranging? Okay. Second, the key support level below current price. And third, the key resistance level above current price. And check the daily time frame. Are those levels significant there too? So draw those levels on your chart, take a screenshot. This is practice. The more you do this, the faster you'll recognize these patterns automatically. And as you practice, like I'm gonna show you how to use the indicator. So for instance, if I come here and if I disable this, and I'll disable this as well. So this is what we see, and like once you zoom out, you can actually mark these levels. Right, so this is support like that, this is resistance, right, like this, yeah. And yeah, and after that I'm gonna be showing you how to add this. So if I just go ahead and enable this, you'll see those support resistance automatically plotted there. Okay, so let's move on. In the next lecture, we're gonna talk about volume, the hidden truth, the most that most traders completely ignore. This is where we bring in the Wyckoff concept of effort versus result, and it's gonna blow your mind. So I'll see you there. Right?